So the goal is like decentralized finance, the transparency of DeFi, but it feels like a centralized exchange. So that means omni-chain, not on one single chain. Now liquidity is fragmented, right? It shouldn't be. It should be one unified liquidity, basically like a centralized exchange, right? People can deposit assets from any chain. They can withdraw from any chain. That's how centralized exchanges work, right? I think that's the experience that users want to feel.
We're currently at Marina Bay Sands, just an hour before Token 2049, and have the opportunity to talk with Ran, the co-founder of Orderly. Pleasure to have you on the podcast.
Thank you. It's great to be here.
Before we jump into Orderly and what you guys do with order books, could you please tell me a bit more about yourself and your personal journey into crypto?
Yes. So my background was in TradFi for many years. My first job was at a company called Freddie Mac in 2006, 2008. So that was the great financial crisis in the US. And I was on the derivatives trading desk. And the whole company pretty much almost blew up. So I had firsthand experience of what Satoshi was talking about that, encouraged him to create the Bitcoin white paper. So then after that, fast track to 2017. So I was in TradFi and trading and asset management. 2017, fortunately, got into crypto. Also,
sorry, before we move to that, could you tell me a bit more about Freddie Mac? Because it was like a massively involved in like the 2008 financial crisis. So how was that experience on a personal level, and how did that affect your entire journey and career path?
Yeah.
Were you wondering what you want to do next? Have you ever reconsider your career choices, or you just run me through that personal journey there?
Yeah, it was. I mean, it wasn't so bad because it was my first job. I didn't have any money. Right? Actually, volunteered to we had this employee stock purchase program where we got a 20% discount. I remember I put the max. It was like 20% of my salary to that, right? Where it just purchased every month at 20% discount to stock price. And I remember when I got into the company, the stock price was around $75. And then when I left 2 years later, it was $5.
Yeah.
So that failed. And that, it wasn't a lot of money. I mean, it was to me at the time, but it taught me a lesson in that, financial markets are fragile, right? It gave me a shock towards what could possibly happen and how so many people lost so much wealth and kind of the intricacies of leverage, mortgage-backed security. So packaging kind of toxic assets, repackaging them into things that is seen as better, but in reality it was extremely risky. You actually see that kind of situation play out with leverage on illiquid assets in this recent bear market down from 2021, with all these lenders blowing up. Just leverage that's not really seen, that's exposed, like Luna and the lenders and such, right? So I actually saw that play out, and it reminded me of what happened in the financial crisis, but on a smaller scale.
Yeah. Okay, and you were telling me about your journey into crypto. So that Web 2 world to the Web 3,
yep.
I guess the Bitcoin and probably reading the white paper or being exposed to the entire idea. But could you tell me a bit more about it?
Yeah, I was in trading, and crypto was like the obvious thing to look at. Given the bull market, you kind of FOMO in. One of our my boss at the time kind of got me into crypto, and I thought it was a scam at first, and then looked into it, right, and thought it was just super interesting. After a while, that was during the ICO bubble, and you see all these projects, and like there's just a white paper, and it doesn't really make that much sense. But it's pumping, and we can trade it. So that's how I got in, and caught kind of the top of that peak. But it was really interesting. So I fell down the rabbit hole. And in 2018, I joined two of my college classmates to create a company called Kronos Research, which is a high frequency trading firm, still exists today. trading crypto assets, spot perps across centralized exchanges, decentralized exchanges. There's about 100 people now, mostly in Taiwan. So I was CEO and partner of Chronos Research. And then 2019, we started a platform called Woo, which is start off as a dark pool, then turned into a centralized exchange. And then later, I started the DEX called WooFi. And that's kind of my journey into DeFi, which is 2020. And after that, I firmly believe, I think the financial system should be on-chain. It should be transparent for the most part. And then it should be all the settlements and auditing and everything just done using a blockchain instead of multiple layers of middleman. And all the assets could potentially just be traded on chain, leveraging the blockchain infrastructure for clearing, for everything. There's no reason that it really needs to exist in a centralized fashion. I think the future of finance should be on the blockchain. So I got deeper and deeper into DeFi, and kind of this is where we are today. It's 2022. We incubated Orderly. First, just like because Wu and Near incubated it, Near blockchain. First, as thought of as like a DYDX on Near. DYDX was pretty hot at the time, right? Order books. And then now it's turned into omni-chain liquidity infrastructure. And the end goal, the vision is to allow anyone to trade anything from anywhere, right? I think that's kind of the end goal. So that's all encompassing of right now it's perps on crypto assets, on RWAs, prediction markets, anything. So then through permissionless listings, and not anyone, because we have builders on top of us that can build. We want them to be able to create a DEX in a matter of minutes. And to cater to their specific audience. So that's the vision, and that's where we're at now.
I feel like DeFi is one of those that most of the Web3 natives kind of understand, but there are some blind spots when it comes to perps and how we can leverage. So could you explain the main stakeholders within your ecosystem and what's the main issue that you're aiming to solve?
Yeah,
I guess it's liquidity, but could you just dig a bit deeper and explain it from the viewpoint of each stakeholder to put a bit more perspective into it?
Yes. So the goal, just to so people can picture it clearly, is like decentralized finance, right? With the transparency of DeFi, but it feels like a centralized exchange. So that means omni-chain, right? Not on one single chain. I believe more in the composability and interoperability of general L1s, right, and L2s. So that's where the ecosystem sits. And so then we're one shared order book between blockchains, unifying liquidity. Now liquidity is fragmented. No matter if it's spots or even perps, it's all fragmented, right? It shouldn't be. It should be one unified liquidity, basically like a centralized exchange, right? So you can imagine like a finance being an omni-chain app, except it's centralized. People can deposit assets from any chain. They can withdraw from any chain. That's how centralized exchanges work, right? I think that's the experience that users want to feel, and that there's always going to be new chains and native assets from those chains, and you shouldn't be dealing with wrapped assets. You shouldn't be dealing with bridges as the user. The end experience should be like a centralized exchange, but the entire infrastructure and the piping sits on blockchain and decentralized and transparent manner. Right? And that's what we set out to build. So the stakeholders are the chains. So we're live on 7 different chains already, going on 8th by the end of this month. And we'll be the first.
What are some of the big chains that you're live on at the moment? And could you tell us the chain that you'll be going on live on next month, or is it not in the public domain yet?
Oh, we've talked about it a few times. So we're live on Optimism, Arbitrum, Polygon, Base, and Mantle. So and Mainnet. So then that's 7 EVM chains, and then we will be going on Solana next, right? So we'll be the first order book with shared liquidity between Solana and EVM. So I think that's and once we do that, people will kind of realize, oh, it can just be combined. There's no reason to just exist on one chain, right? We'll be launch partners for Monad, that's already been announced. And basically anywhere that there's users and traffic, we want to be to set up our infrastructure.
And when we talk about the liquidity, how do you find your liquidity providers?
Yep.
Could you just run me through that process? And also, how do you incentivize them to be liquidity providers on orderly rather than any other competitor of yours?
Yeah. We have 30 plus market makers now who's actively quoting on orderly. So they're trying to provide the best bid-ask spread for perps like Bitcoin, ETH, Sol. I can say we're probably the best top of the book liquidity in perps right now, on decentralized perps. And these are some of the big names in the world, like Wintermute, like Selene Capital, like world-class market makers that's doing this. We are offering them a 1.5 basis point maker rebate, right? So they get paid to provide maker liquidity. There's also a pool of our tokens, the order tokens, that they share every epoch based on their uptime and depth and such. We designed this program 2 years ago and iterated so that now it's a very mature program. They like it. They're putting very tight. We get feedback from them all the time. So that's kind of now it's just by professional market makers. The next step, we will create pools that allows anyone to become a liquidity provider, right? So that I think the optimal liquidity will be active and passive liquidity. So the professional market makers and retail liquidity provision. So that would be the next step to pool together assets. And this will be further enhanced by things such as permissionless listings.
And when are you implementing the next step? Can you tell me a bit more about the roadmap?
Yeah. A few big things that we're working on is Solana integration. That should be early next month. The vaults that allow users to add liquidity and market makers to draw from those liquidity to quote, that should be by year end. And I think also we will try to get permissionless listings out in some form before year end. These are like the big things on the roadmap for this year. So these are like the big things that we have coming.
Nice. And I think we touched on spots and perpetual trading, but could you just explain that for people that are not aware of what exactly those are?
Yeah.
And what's the utility of those? Because perps are associated with being comparatively risky. And at the beginning of the interview, you outlined the issues with it.
Yep.
But a lot of people are kind of interested and a bit willing to explore within that ecosystem. Could you just tell me a bit more about those?
Yeah, spot assets is just a native token, like Bitcoin, ETH. If you were to buy the actual Solana token, that's just spot assets, right? There's many venues that you can do that on in centralized or decentralized. I think that spot is a lot more competitive and mature in DeFi. Like you have the Uniswaps and you have the Radiums and you have all types of like RFQ type of trading that exists. Perps, I think, is less mature and there's much higher growth potential in that perps in CeFi is probably 4 times the volumes of spot because there's leverage and it's kind of easier because you can deposit point A and trade anything potentially. Like you can deposit Bitcoin or USDC, and you can trade a variety of things because it's like futures, right? It's based on Oracle price that you're essentially betting on the volatility of an asset, the direction up and down, and leverage is optional. You can have no leverage even for perps, or you can have high leverage, right? It's up to the platform, it's up to the user. So it doesn't necessarily have to be a super high leverage thing. And then we intend to structure it as such, like things that are inherently risky, let's say pre-launch, pre-markets, can be much lower leverage versus something that's very mature and liquid, like let's say FX, that can be maybe 1,000x leverage, right? So it's more flexible. It allows you to just own some asset and then trade anything, right? So again, that's that's going according to the desire of being able to trade anything, right? And then some things just don't have spot underlines, like prediction markets. There's no spot. Like the Trump Harris prediction market can be a perp, but there's no spot underlying. So spot is like the easiest thing to access that allows users to be able to trade anything, have leverage, not have leverage, and potentially use anything as collateral.
And just a final question about Orderly. How do you guys compete and compare with the rest of the people within your ecosystem?
Yep. Yeah. So Orderly is not a DEX. It's the infra that services DEXs and empower them. So there's actually 20 plus builders on top of Orderly. They face retail. And we're like this order book Lego for them to create a perps product, right? So like there's wallets that use us. There's Telegram apps like Unibot. There's AMMs like QuickSwap. Their perps is on top of Orderly. There's perps aggregators, LogX, Buoy, BitToro. These are some of the largest perps aggregators. They're all integrated with Orderly. There's wallets, like full wallets. There'll be custodians. So any app that has an existing users, they want to expand into perps. We want them to do it in a matter of minutes. And it's right now it's not minutes. Right now it's like a week and 2 devs. But we want to streamline it so that even like influencers, communities, they can create their own branded DEX in a matter of minutes and service their community.
Okay, so would they still need to partner with a DEX, or you would enable people to build their own DEX?
Yeah, let's say you have your community, you want to have your own branded DEX, maybe issue a token, you can do it. Yeah.
Are there any risks associated with it? Do you think that some people might exploit it and build their own DEXs, potentially pump their token? Because especially with like a lot of what do you call them, celebrity coins going around, a celebrity might decide to start spin their own DEX, and then people can start trading it with leverage, and then when it crash, because most of them, like 95% of them crash, that could create a bit of a problem and a lot of liquidity. A lot of people get liquidated, probably lose more than they were intend to. Do you think that could potentially be a problem, and how are you hoping to mitigate that?
Right. So, the major assets, the liquidity will be very, very good. I can imagine liquidation is different to like a centralized exchange, because the market makers and the pools will optimize for that liquidity. It will also be arbitrage against CeFi, against other places. So you're not going to get this kind of a situation on like ETH or Sol or Bitcoin perps, right? But if the person creates their own token, right, then of course there's that risk. But then it's the same risk as if they created it on Uniswap versus they created it on Orderly, let's say, right? So then I think our objective is to make it very permissionless for people to. I mean, there will be criteria. There will be like liquidity criteria for them to list the perps, and perhaps governance even, right? But then it's up to. I mean, it's going to be up to like the brokers. There's an additional filter with the brokers, with the guys who build on top. So I mean, our layer is the liquidity layer, right? It's like Uniswap. Everyone can create an asset if they want to and list it. Given like liquidity requirements, right? And after that, it's up to the retail facing, because we don't face retail. It's up to the retail facing builders on top to kind of filter that and determine if they want to list that. Or in this case, if the celebrity creates their own platform, then they can just market that to their fans, right? And I think there will be that risk. There will be that risk, but it's no different than the same kind of risk on Uniswap.
Yeah, the reason I ask is because I might be wrong, but I think you can't do anything with leverage on Uniswap.
So right.
That it's just spot. You put your money, whatever you're comfortable using, And if we enable celebrities to allow their communities to trade perps where they could potentially borrow and invest into that, that could be a bit of a problem because all those coins are so volatile. So now you're not trading the money that you have in your bank account, you're trading money that you've borrowed. So that's the issue that someone might face.
So I think there's various ways to deal with that risk, right? For one, the person creating the perp would have to put in liquidity. So actually that risk is on themselves. If they're the liquidity provider for this, and they toggle leverage, and we can put leverage restrictions on newly listed assets, right? Like pre-launch type of assets, or even let's say all new assets that's not a major can have this sort of a restriction. And potentially it just behaves like a spot, right? But it allows them to list the assets. And then after certain requirements are met, like volume or liquidity requirements, then you can toggle up the leverage potentially. So there's ways to mitigate this type of situation. But there's also the thing with adding liquidity, which should be done by the asset creators themselves, right? And they own a piece of that risk.
No, I definitely agree. It's good to have the infrastructure. That's the nature of the industry that we're building in. You allow people the freedom to build whatever they want. Then there's some risk associated with allowing people to freely build. So some people might get burned, but that's probably what our viewers and listeners should be aware of whenever they're trading and they're trying to learn more about this comparatively risky environment. So there's risks associated with it. So we'll be going to Token 2049 next. So what are you hoping to get from the events?
Right. So I have a few panels and speeches here. It's great to meet all of our partners. We have many. So you talked about ecosystem before. So our ecosystem consists of the chains, the builders on top, like the 20 plus builders, like this big network of KOLs and our investors. We have some of the best investors, I think, in this space, like Pantera Capital, Dragonfly, a bunch of traders. We try to align everyone in the beginning to the vision of what we wanted to build. So here, I think it's rekindling the relationships, generating partnerships, new partnerships with builders, with traders, with community, talking about getting more awareness for us, right, and what we're trying to do, and just getting people who are interested in Orderly and what we're trying to achieve to come and work with us and to support us on the vision, because the end vision is very big, and it has to be done in a way such that everyone is a stakeholder. I mean, even right now, the way we're designed is that, and that's the other thing that's great about Web3, because everyone can be a stakeholder through the token, through building, and they're all getting incentivized, and then you work together as a whole to make the ecosystem bigger and greater. So I mean, we're designing and building out the ecosystem as we speak and aligning incentives. We had a token that launched less than a month ago. This is a big piece where you meet everyone in one place.
And you might not be actively trading yourself, but I assume you spend quite a lot of your time talking to traders. So just a quick temperature check. What do you think would happen within the next few months with the crypto community, mainly the price of crypto? What's your price prediction? And I won't hold you to it, but I'm not actually, to paraphrase that question, I'm not necessarily interested in the price, so I don't need the price prediction, but I would love to hear your thoughts on the movement and how do you think that this bull run that we assume is pending will play out? Do you think that there will be like a bull trap where we'll have like a massive, like a run and then a massive decline before another run? Just because of all the macro factors that are going on at the moment.
So I've been through 2 cycles, and this is like the third. I think I'm bullish, right? Q4 next year. I think we have not escaped the 4-year cycle. Just if you just look at like very simple, dumb stats, Q4 has been pretty good historically. The last peak was 2021 November, and the peak prior to that was 2017, end of the year. And the next one should be potentially 2025, end of the year, right? 4-year cycles. So we've come like 6 months of consolidation. It feels very bad. It feels quite bad until more recently, right? Especially for alts. But I think it's kind of the max pain point where people are like, oh, I give up. Just very recently, that's a very bullish sign to me. Today we have the Fed meeting, right? Expected 50 bips rate cut, hopefully. And hopefully we have the US elections or Trump wins, hopefully. And these are catalysts, right? So easing monetary policy is always, I think that's one thing that people just kind of neglect because they see everything else and this isn't even that fast moving. That's actually huge for all assets. And so I'm bullish. I think there are certain catalysts in play that are very very bullish for us, and I think so I'm bullish myself.
Yeah, I was desperately trying to find the second year because I know that the cuts has cut rates by 50 points, 0.5, 50 points, twice in the entire history of the Feds. The first time was 2007. The second time was 2001, I would like to say, but I'm not 100% sure. But anyway, that was preceded by a financial crisis.
Yep.
The 2 times they've done that.
Yep.
So are you concerned? But my main concern is actually that we'll activate this bullish catalyst and then everyone will get super bullish, but the underlying macro would not support that, because at the end of the day, if you want to go to the next bull, I always say that my taxi driver should start talking about crypto and start asking me about Bitcoin.
Yeah.
So we need this Web2 natives to come and get involved.
Yep.
But if they don't have the liquidity and the money to get in simply because of the underlying macro conditions, I don't think that the bull market that will be able to rally as hard as the last 2 runs. Is this something that you're concerned about, or do you think that that won't stop us?
I think crypto as a whole, as an asset class, $2 trillion is not that high yet versus gold. That's magnitude more. And if you look at equities, fixed income, I think we're still small, and institutions haven't gotten in that much yet. That's the big money, being like an institutional asset manager before. So when you see it's not even about that's the top indicator we described, like the taxi drivers, right? That's towards the peak when everyone is talking about it, and Bitcoin prediction is at like 1 million, but we're not anywhere close to that yet, right? I think that the sentiment is actually not that great right now, and it's gotten a little better recently. But the institutional capital flowing in, that's a gradual process, and once they're in, it's sticky. So you can see that through the ETFs, which hasn't been good, right? But I would say institutional capital, they FOMO also. So they tend to, in every cycle, they actually, it's sad to say it, they buy at the top, right? When you see that with VCs in the last cycle, investing in things like FTX and such. And I would expect that to increase as prices go up, to be honest, with the capital inflows. And there will be more access points aside from ETFs and the futures. That's like the 2 major access points. And like Preso index funds and things like that. But there will be more access points into more esoteric products like hedge fund strategies. Ventures have been in a while that allows institutional capital to flow in. And I think that a lot of the big guys are not in yet, and their allocation size is small. So I think there's a ton of capital that's not in crypto yet that it could be. And I honestly think they just behave like retail or like people where as prices pump, they're gonna get in, right? It's not necessarily a contrarian, but they are more contrarian to retail. And that process actually dampens the volatility of crypto, right?
And do you think that they'll come in through the ETFs, or do you think it'll be more family offices? How do you define like this venture capital? Because I guess it has like subsets itself.
Yeah.
The reason that I'm not very bullish on them is because they tend to be a bit slower.
Yep.
Because I always say that they will add the extra 3 zeros to my portfolio. Yeah. And I'm looking forward to it. Yeah. But they tend to be slow. Like the retail investor is like, oh, I have like 5K and it's going up. I'm willing to put it in or whatever the number is. While capital managers are investing the big numbers, but yeah.
Yeah. I see them. There's a few ways, right? So the from the least risky to the most risky. The most risky are the prop firms, HFTs, and the VCs, and then it's the family offices. The VCs and HFTs have been in for a while. I mean, VCs from traditional to Web3 native, billions in AUM, they're already in. High frequency traders are already in. Even on DeFi, they're already trading on DeFi. They're trading on us, right?
Yeah.
So these are the most risky. And then it's family offices, higher risk appetite. And then it's like the asset managers, the pension funds, the endowments, the sovereign wealth funds. Least risky. But every time they make that decision, it's like in the hundreds of millions, maybe north of that, into crypto. They're coming in through a few ways. One is very regulated instruments like ETFs, like CME futures. Right, these are the ways that they're used to, and also index funds like Grayscale. That's already happening, but I think they still, a lot of them would tend to FOMO. And starting with like the most major asset, Bitcoin. Now there's Ethereum. There's not that much interest now. We'll see. And also through prime brokers, right? There's a bunch of more institutional prime brokers out there now. You know, the Dow Galaxy Digital is the Falcon Axis of the world. That bring in, they're very connected with it. They're regulated. They're, they have all the institutional setup, compliance, custody, and they can bring in the institutional capital in. So they'll trade through like a prime broker. They'll buy spot, they'll perps, exotic products. That's the way that like a Goldman Sachs essentially. And the investment banks are doing this too, right? The investment banks are doing this themselves, so they're slower than the crypto native guys like Galaxy, but this is what the institutions are used to when they're buying, selling assets. And then any sort of a run is going to draw more and more interest, right? It draws more and more interest. They look at the configuration of their portfolio, where they should allocate to. And I think it'll just bring, every single cycle, it brings more of these guys in. And I don't think this is going to be all that different in this cycle.
Yeah. Thank you so much for sharing your thoughts on the market and the direction of the market. Such a pleasure talking to you.
Yeah, great talking to you.
And thanks for joining the podcast.
Thank you.
Thank you so much.
All right, thanks.
Thank you.
Thanks.